What is a backed currency? A backed currency is a form of money whose value is directly tied to a physical asset or commodity. This contrasts with fiat currency, where the value is not derived from any physical commodity, but rather from government decree or trust in the issuing authority. Historically, backed currencies have provided a tangible guarantee that a currency holds value, whether in gold, silver, or other commodities like oil or even real estate. The fundamental principle of a backed currency is that it is redeemable for a specific amount of the underlying asset. This was designed to provide a sense of security and stability, as people could convert their money into the asset it was pegged to, giving the currency a built-in value. Gold-backed currency is one of the most well-known forms of backed currency. Historically, gold was used as the ultimate form of money because of its durability, divisibility, portability, and scarcity. Gold has intrinsic value due to its properties, making it a universally accepted store of value. Under a gold standard, a country's currency is directly tied to a specific amount of gold. For example, in the United States, the US dollar used to be backed by gold. This meant that for every US dollar in circulation, the US government would hold a corresponding amount of gold in reserve. The gold standard, 19th century, early 20th century. The classic gold standard period spanned from the 19th century until the early 20th century. Countries like the United Kingdom, the US, and much of Europe adopted this system because it was seen as a way to promote economic stability and prevent inflation. The promise was that you could exchange your paper currency for a fixed amount of gold, providing confidence in the value of the money. The Bretton Woods Agreement, 1944 to 1971, which established the post-World War II economic order, pegged most currencies to the US dollar, and the dollar was itself convertible into gold at a fixed rate of $35 per ounce. This system lasted until 1971 when President Richard Nixon officially ended the gold convertibility, marking the shift to the modern fiat currency system. Advantages of gold-backed currencies. Price stability. By limiting the ability of governments to print excessive amounts of money, as the money supply had to be backed by a physical reserve, gold-backed currencies historically helped prevent runaway inflation. Confidence and trust. People trusted gold because it was a physical asset with intrinsic value that couldn't be artificially created. This trust helped the currency maintain its value. Challenges of gold-backed currencies. Inflexibility. A currency tied to gold has limited flexibility in responding to economic crises. Since the money supply is dependent on the amount of gold reserves, central banks can't easily increase or decrease the money supply in response to changes in demand. Limited economic growth. If a country's economy grows faster than its gold reserves, it may experience deflationary pressures, as there would not be enough money to support the growth. This could hinder economic expansion. Example of gold-backed currency in practice. During the 19th century, the United Kingdom and United States both used the gold standard. In the US, the gold-backed dollar was pegged to a specific amount of gold, e.g., 1 ounce of gold equaled $20.67. As the world moved into the 20th century and faced the economic upheavals of the Great Depression and World War II, the limitations of the gold standard became more apparent. In 1971, Nixon ended the Bretton Woods Agreement, and the US dollar was no longer directly convertible into gold. This marked the end of the gold-backed currency era and the beginning of fiat currencies. Other forms of backed currencies. While gold is the most famous, other forms of backing for currency have been used or proposed. These include silver-backed currencies, commodity-backed currencies, and basket-backed currencies. 1. Silver-backed currency. Silver has similar qualities to gold: durability, scarcity, and divisibility, but it is more abundant and cheaper. Historically, silver-backed systems were used in parallel with gold-backed systems. The silver standard. Many countries used silver as the basis for their currency system in the 19th and early 20th centuries, especially during periods of economic hardship when gold reserves were not sufficient. For example, in the US, silver dollars were minted and circulated alongside gold coins. The Chinese and Indian silver standard. Both China and India, during the 19th century, had silver-backed currency systems. Silver was abundant in these regions, and its use was tied to international trade. 2. Commodity-backed currency. Some proponents of a commodity-backed currency system have suggested tying the value of currency to a basket of commodities, e.g., oil, food, or industrial metals, instead of a single commodity like gold. This could mitigate the risk of volatility that a single commodity might introduce. The petrodollar. In the 1970s, the US dollar became indirectly linked to oil as part of the global petrodollar system, where oil exports were priced in US dollars, while the dollar was not directly convertible to oil. The widespread use of the dollar in international oil transactions created a de facto backing for the US currency. 3. Basket-backed currency. The International Monetary Fund has proposed a basket of currencies, known as Special Drawing Rights (SDR), which are based on a blend of major global currencies, such as the US dollar, euro, Chinese yuan, Japanese yen, and British pound. Although not a traditional commodity-backed currency, the SDR represents a basket of trusted global currencies, with its value determined by the collective strength of these currencies. Fiat currency, a modern evolution. Fiat currency is the opposite of a backed currency. It is money that has value not because it is backed by a physical asset like gold or silver, but because the government says it does. Fiat money has no intrinsic value and is not backed by any tangible commodity. Its value is based solely on the trust people place in the government that issues it and the stability of the economy it represents. Characteristics of fiat currency. 1. Government backing. Fiat money derives its value from government decree. Governments declare it as legal tender, which means it must be accepted as a means of payment within the country. 2. Unlimited supply. Since fiat currency is not tied to any physical asset, central banks can issue an unlimited supply of money. This allows governments to respond to economic needs, but it also introduces the risk of inflation or even hyperinflation if money is printed irresponsibly. 3. Inflation risk. Fiat money is subject to inflation, as there is no physical constraint on how much money can be issued. If more money is printed than is needed by the economy, it can lead to a loss of value. For lack of tangible backing, fiat currencies are not backed by physical commodities like gold or silver. Their value is tied to trust in the currency and the stability of the government. Advantages of fiat currency. 1. Flexibility. Central banks can control the supply of fiat money, which gives them tools like interest rate adjustments and open market operations to influence economic conditions, e.g., managing inflation, stimulating growth, or controlling unemployment. 2. Economic growth. Fiat currencies allow for more rapid expansion of the money supply in times of economic need, such as during a financial crisis or recession, where more liquidity can be injected into the economy. 3. Global acceptance. Fiat money is widely accepted because it is mandated by governments, and its value is reinforced by the global economic system. For example, the US dollar is the world's primary reserve currency, used in global trade and finance. Disadvantages of fiat currency. 1. Inflation and devaluation. The main risk of fiat currencies is the potential for inflation, as governments may print more money, leading to a decrease in the currency's purchasing power. This happened in countries like Zimbabwe and Venezuela, where hyperinflation led to the collapse of the local currency. 2. Trust dependence. The value of fiat currency is entirely dependent on the trust people place in the currency and the issuing government. If the government becomes unstable or loses credibility, the currency's value can plummet. The US dollar, the euro, the Japanese yen, and the British pound are all examples of fiat currencies. Most modern currencies in use today are fiat, with governments and central banks managing their issuance and regulation. In summary, backed currencies are those whose value is derived from a tangible asset, such as gold or silver, providing stability and confidence. However, they come with limitations, especially regarding flexibility in responding to economic changes. Fiat currencies, on the other hand, are not tied to any physical asset, but derive their value from the trust in the issuing government and its economy. They offer more flexibility in managing economic policy, but come with the risks of inflation and devaluation. The shift from gold-backed to fiat currencies represents a significant evolution in monetary systems, driven by the need for greater control over money supply and economic policy flexibility.
If you found this video helpful, be sure to hit the like button and subscribe to the channel. Until next time, this has been The Long and Short.